Hey everybody, welcome back to my channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Check out my other videos. If you like what I'm doing, please give a thumbs up. It really helps out the channel, pushes the YouTube algorithm, so it shares the video with more people. Also, consider subscribing if you like what I'm doing. You get notifications about all my new videos, all right? So today we're going to talk about CCL, Carnival Cruise Lines. I made a video a couple of days ago on CCL. I'll link it below if you haven't checked that out. Basically, I was talking about are the cruise companies going to go out of business, and specifically, will Carnival go out of business? I went through the numbers. I went through what they're doing. So let's take a look at a stock chart of today of CCL. So basically, it's a nosedive. It's like my second worst investment so far. It's down to $10.21, and just like literally a month and a half ago, it was trading for more than $50. So now it is down to $10.21, down 80% on the year. In 3 months, down 78%. In 1 month, down 53%. So it closed today at $10.64, which was actually up 20%, more than 20%. So the stock today, CCL, Carnival Cruise Lines, made a huge jump, 20% jump on the stock today. It was trading for about $8, $9, and now it was trading at $10.64. So we're going to talk about what caused the stock to jump this much, to pop more than 20%, because a 20% pop has to have some type of news behind it. Well, first of all, the market today was just amazing. The Dow had, I believe, a 1,200 point increase. So the Dow did awesome today. That also helped, of course. So just to recap on the capital resources of what Carnival is doing, basically they are in survival mode. They have managed to get up to $11.7 billion in liquidity. So on March 13th, they drew down roughly $3 billion, basically a $3 billion loan. So they have about $11.7 billion in liquidity. Again, like I said, they are in survival mode. They are making $0 in revenue right now. So they are trying to get as much money as they can. The government said no bailout for you because you are not an American company. Most of the people you employ are not Americans. So you are not going to get a bailout from the American government, and that is rightfully so. They do not employ a majority Americans. They do not base their company in America. They're actually based in Panama. So no bailout for you, and I don't believe they should get a bailout. So that is totally fine with me. I'm an investor of the company, but that is totally fine with me. I don't expect the U.S. government, the U.S. taxpayers to pay for a company that is not based in the United States and does not employ majority Americans. So that's totally fine with me. So basically what they had to do was go into the open market to get loans, and that's what they have been doing. And they also have issued more stock at a public offering of $8. So that's why their stock was trading for around $8 in the past few days. So they managed to get about $500 million with this public offering. So they recently raised about $6 billion in stock debt, and they caused their shares to jump a little bit. So basically, Carnival plans to issue $1.25 billion in stock, which they already have, $3 billion in secured notes, and $1.75 billion in convertible notes. So this is all already done. This is old news from March 31st. These numbers are already in. These are all complete. And all these convertible notes, everything is due in 2023. So basically, that means by 2023, they need to be starting to make some revenue. So they have to start, launching some cruises, getting some revenue. Because if 2023 rolls around and they're not going to be able to pay their debt, they're going to be in a world of pain. That is serious bankruptcy right there, because they already got loans and they're going to default on their loans. So in 2023. If that happens, that is pretty much goodbye Carnival, and probably goodbye to all the other corporations, cruise corporations. So, but is that likely? That's in 3 years. So just think about it. In 3 years, do you think we're going to start cruising again? People are going to cruise again, yes or no? And I think the answer is clear. In 3 years, we will obviously have a vaccine for this illness 19. There's going to be a lot of new precautions and policies about these ships and cleanliness and all this kind of stuff. Everything's going to blow over. People are going to forget, and they're going to lower their prices. Maybe a cruise used to be $3,000, for a family of 4. If they drop that down to $2,000, it gets really, really enticing. So it's all about money. You drop that price, people are going to go. So all they need to do is start filling these ships. Maybe it's only 50% capacity in the next few months, or maybe up to 75%, or maybe 70% by the end of the year. Next year rolls around, they could probably do up to 80%. they will eventually get up to what they were doing before. It just takes time. It just takes time and confidence in the industry, in the market. So there's no doubt that they are going to start cruising again. Once this blows over, there's a vaccine, everyone's going to feel much more comfortable about going out into public spaces, going on cruises, etc. So there's no doubt in my mind that they will be able to start cruising, and there's no doubt in my mind they will be starting to pay off their debt when 2023 comes around. So I'm not afraid of that at all. And so the silver lining about basically why their stock popped today, basically it popped 20%. And so a stock doesn't pop 20% without any news behind it. So here's the major news in case you haven't heard. So basically the Kingdom of Saudi Arabia has invested in Carnival Cruise Lines, CCL. They are now a roughly 8.2% stakeholder in the whole company. They purchased 43.5 million shares of Carnival Cruise, CCL. So now basically the Kingdom of Saudi Arabia is 8.2% shareholder of the company. They own 8.2% of the company now. So they have put their money behind the company. So obviously they believe in the company, but also, that's probably just a drop in the bucket as far as money is for them. They could probably lose all this money and it wouldn't faze them at all. But at least it does show some confidence that somebody does believe in CCL. And because of that, other people have piled in and have more confidence in CCL now. And after all, they were able to get money. They have about more than $11 billion in liquidity right now. They did a capital raise and that was successful. They sold more shares. So they are able to hold themselves off for at least the next 1 to 2 years. So there might be a bright point in this whole situation. So the question is, am I gonna buy more shares of CCL at this lower price, $8 to $10 that it's trading for now? And the answer is no, not really. In my public account right here, I have roughly 109 shares of CCL. My total cost basis is $2,544 and at 23.16 cents per share. And quite honestly, I am pretty happy with that. I was initially buying the CCL stock in the 40s. So I have brought down my cost basis to $23, lowering my cost basis. And I am actually pretty happy with $23. Basically if it goes back to what it was trading at for $40, $44, basically a month and a half ago, I would have doubled my money right there. And if I double my money, I am pretty happy with that. If it goes back to, the record highs of like $60, $70, I'll more than double my money. But that probably won't happen in the next 3 to 5 years. So I am not interested in lowering this cost basis anymore because there is still some risk. You never know. People might not want to cruise at all for the next 3 years or maybe 4 years, and they don't hit their numbers. They don't do 50% capacity. They don't do 75% capacity. So you never know. They could still go bankrupt. But it looks unlikely now that they have so much money, so much liquidity on hand, but there still is that risk. And right now there's so many other companies that are at a good price point, bigger companies with a lot of money behind them. So I don't see any reason why I will put more money into a stock that is a little more risky when there's so many stocks right now that are much less riskier. It could probably yield maybe a 10 to 15 to maybe 25% increase on the money in the next 1 to 2 years. So that's the way I look at it. I don't think I'm going to put more money into this stock. Not that I don't believe in it, but it's just a little riskier than other stocks out there. So that's my video, guys. Let me know if you agree. Let me know if you disagree. Leave some comments below. I read all your comments. If you like what I'm doing, please give it a thumbs up. It really helps out the channel. And consider subscribing. And I'll talk to you in the next one. Peace.